left hand select September to extend level break. So this is because I realized that some people are asking me whether this strategy can be used for as a real strategy for trading. If it's just we find it with breakout itself for us to be successful. So my answer is very simple. False breakout can be traded as a strategy. It's wrong. Still trade it if you know identify false breakout very well, and still trade it on its own. You don't so much on breakout itself, but still trade false as a strategy. So we'll start first of all. Sorry, just a second. Start first of all by looking at just a slight recap what breakout itself is. So move forward and look at what breakout is, and then at instances when if you see false breakout, free to start trading it. So breakout is when price breaks above level, then it sustains that. That's called a breakout. So if price breaks above level, it's able to sustain that breakout. It remains above that level which is broken above. That's called a breakout. But if price breaks above a level or below a level, then it fails to sustain that breakout. Then that's called a false breakout. So on a live chart, this is how it would look. Just a second. Separate. So going to the grid. So just a second. Should be good. Also going to hide the line graph. Start by first looking at this. Assuming you have this level here as a resistance, also have one line bottom as the support. Price comes from this point here, continues up this resistance, bounces off and heads down this support, comes back again up, same resistance, not break above it, comes back again, goes back up, same resistance. When you see this happening, first thing you need to is as resistance. Mark the next one also as resistance, sell place, and then also this one you need to sell. So if you sold it here as just that this is a resistance, then you make a sell. Price does not the lower side, instead it breaks above. This in itself is a breakout. The fact that price opened below this line and then closed above, that's a breakout. So it sustained. Whether it has sustained, you'll see price retrace back down up to this level, but does not cross below this line 1.2257. Continues up, and then if it comes back again down to the same level, tends to be sustained above. Like it cannot break now below the same level we're selling from. So this is a buy place, then this is also a buy place. Now this is called a breakout. This is a genuine breakout. It's not false because price has gone above a level, has successfully remained above that level. That's what's called a side. If price after sustaining comes back down, that's support. Hence, therefore, sometimes you see price continue up, it comes back down, same support there. So when this is support, you from the past, you have to mark this as a support. Also, you this as a support. Mark this as then if you put it here that this is support, the price breaks below It's a break. So after this breakout, to see first of all if that breakout of price or this is just a false breakout. And the best way to know that this is a breakout is when price comes back to the same level, it's not able to cross above. Instead, it bounces back. Continue to the side. So this should now be a sell place. This should now be a sell place. This is another bearish breakout. This is a bullish breakout. One is a bearish breakout. I want to check a real chart to see exactly what that means, what the breakout, real breakout is from this chart. So the first thing that you need to know is you have to learn and understand how to the levels correctly, understand peak, support, resistance. In this case, we have this line, the red complete line you're seeing is actually the first line, so we have to delete it. It's a level support, and we also have this as support. So previously we were using the same place as a support. Price continued, came back as a support, continued up, it came back as a support, continued up, this break to the far side. This is called a break. So the fact that price didn't come back immediately basically means that we sustain this breakout, like we are likely to remain below that level. So when price comes back first time but does not close above the same zone where we are selling from, does not break above it, instead it bounces back, comes back, does not close above, continues down, then it's attempting to come back. This is a sign to sustain this break below this level. So that means the price is likely continuing the lower side. This is what is called a breakout. You have a level, price breaks below or above it, it's able to sustain that breakout. That's a genuine one, genuine breakout. So have this. Let's look at this here, and then we also have this. So look at it from this point here, assuming you have a vertical line here. Support, 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 support. Somehow price is consolidated below this level. So this is a sell. As long as the price has gone below a level, then it cannot now break above the same level. That is called a genuine breakout. It's called a genuine, and this is a bearish one. The price has gone below. We are struggling to get above, but somehow the break below, we can now not get above the same place where we are buying from. So this is a genuine breakout, and it's supposed to be a sell when this happens. Breakout. Back to the more example. We have this one here. Also have this. Do this as a support, 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 support. It's a break below. First retracement, next retracement. So even this, if you are to draw a line here, then you are considering this as support, a support, a support, this breakout. Then this becomes a genuine breakout. This becomes a genuine breakout. It means price is continuing. So the best you should be doing as well is to sell position, not looking to buy orders. Anytime level which is holding perfectly, then some price successfully breaks below or above that level, then any attempts to get back again above or below that level fails. That's a genuine breakout. It's a very, very good strategy if you follow it very well. If you can understand exactly what this means, follow it on chart perfectly. It's really good. Make you something very, very good. If you can follow records very well, really big. So the the problem comes when you cannot identify a level saying you're trading a breakout. That's where the problem is. But if you can get your levels very well correct, you're good. The example. So we get so much on bearish breakouts. Let's look at each one. So have this. So just at how I'm drawing my levels, then not tell me how vertical. Considering from this point up to this point here, this level, and the main reason being that the reason why I'm saying this is because these levels look much better. These are the places like from this point to where I've drawn this other line. It's much more clearer. At a distance, price continued down the same week, came back, same resistance, the same week, continued, came back as a resistance, continued down, and this candle which opened below, closed above. Anytime you have a level, especially for a level from 4 chart, you have a very good level which has been holding the entire week. Then next week, price successfully rises beyond that level. In this case, we have this. This is called a breakout. It is this candle which is now referred to as the breakout candle. After the breakout, price attempts to come back down. First time fails, continued up. The second time it fails, up. The third time it still fails. It continues up. Fourth time there's this breakout. So when you see this, anytime this price goes above a level and then it's held above that level, that becomes a genuine breakout. That's a genuine breakout. It means we are likely continuing that direction for a long time. So when that happens, that the price has gone above a level and then the first attempt to go below that level fails, like in this case, it's a failed. The first attempt has failed. Next one also has failed. You are now free to buy this one. So just look at how the price is rising. When it's rising now, we still have this as a resistance, which go ahead and mark it as a resistance. So mark this as a resistance. So we have that resistance. It's a breakup. Price came back, the same support, which means this is still a buy. So all of it came from the first one. So if you actually took this buy, you don't have to buy the next one. But if you bought this and you've already taken your profit, you can still buy this one. When you buy, you go up to the next closest resistance, and that is this. This 1.1.20. So the best is to look for buy positions after this, and if price was to go above this level, then we simply just wait for retracement, buying it higher. This example. This is also a very good resistance. It just that has been used only once as a resistance. So have this resistance. The lower side came back as a resistance, as a break, as a retracement, as a support, and it's supposed to buy. So if price goes above a level and then it remains above that level, that is what is called a genuine breakout. So those are very good examples we've looked at. One now to add and the breakout is before we check it on the real chart. So the same thing is we'll use the same drawing. First, draw something like you expect to be. We have two levels. We have the first one, the resistance, support, resistance. So when price comes to this level, wonder how much it's being held. Anytime price approaches this level but does not break above, now get interested. So First time price comes to that level, there is no interest. We don't know whether it's a resistance or not. Continues down, then it gets back down. But since this is the first time we're seeing this as a support, tested, comes back the second time as a resistance. Now get interested because previously the same place was used as a resistance. So now say this was a resistance, then this is a resistance now. Because also knew this from the past as support. The second time it comes back, this is also support. So we wait for price to proceed upwards. In this case, we have this come back as a resistance. This happens. So assuming price comes to this level here, instead of bouncing back to the upper side, it actually breaks below. Sorry. This is called a breakout. This is called a breakout. The fact that price opened above here and then closed below means that that's a breakout. But the next thing is to confirm if price is going to sustain that breakout. If something like this happens, that price has gone up a level, then instead of remaining there, it actually breaks again above. Goes up after breaking below, breaks again above 1.2082. This one, the entire move to the lower side, is now referred to as the false breakout. This one. So if you're looking at this chart correctly, you better be looking for buy position the first time price retraces back to the same support. So this support, price goes below it and comes back again above. Next time price comes back to the same level, this always happens immediately. This should be a very, very good place to buy from. This happens, you find that there was a level, price has gone below it, then immediately it comes back again above after closing below. First retracement normally is a very buy. So don't mistake that this is always a very, very, very good buy. Successfully buy it after this false breakout. Then you need to ensure that you remain up to the next resistance, which is this one. So one thing which I want to say here before that, in my experience, this is always the best time to trade after that false breakout. You want to make money trading anything called breakout. Best time always is to enter trades after the false breakout itself. Breakout is okay, you can do breakout, you can trade breakouts, but if you can find false breakouts, enter after false breakout immediately on the first retracement to the level which was being broken. That is always the trade. It's always the best time. 90% of the time you'll get the correct move. Find that price has eventually gone your direction. So I recommend that if you trade breakout itself, be sure that you first of all understand breakout. It's after the false breakout. Trades after false breakout. So if you have like this, price has come back above. First time price retraces to the same level after that false breakout is always a good place to buy from. So it's ideal, like it's almost 90% of the time you'll pick it correctly. Price will eventually go your direction. So another thing, this happens in various versions. Sometimes this could happen. Price may break below, then break above, then again break below. This means is that this is now the false breakout. This one, the attempt to get back again above that zone is what is now referred to as the false breakout. This one here is now the false breakout. And as I said, enter trade after the false breakout, which means you basically wait for price to try coming back. Then you sell it. Means this is the correct place to sell from here. That was the correct place to sell from. So This one here is now becomes the false breakout. And I want to explain this much better why this is the correct setup. This would mean when price does something like this, is the break below this level was actually a genuine one, only confirming if still people are willing to buy. So notice something at how I want to handle this one. Put this to be red big line. Look, there's a break, and there's another break above. There's a break below the second time. If looking at this correctly, you'll notice that this is actually a Z formation. This is a Z formation, and Z formation means we are continuing in that direction. So how many, you look at how many times the price has gone below this level. This is the first time. This is the first time it has gone above. This is the second time price has gone below. So actually broken below that line 2 times, the same direction to the lower side, but only once upper side. Means is you are supposed to look for a sell. Anytime you find that price has gone below a level 2 times, while the opposite has gone only once, that's a positive sign. Means we are possibly continuing to that direction. So when price goes below a level and breaks above the same level and breaks below, which means we are going below that line 2 times, but we are going above it only once, we are still bearish. So the next time price attempts to come back to this level, you should look for a sell. The first take profit here. This is like people who take profits out of fear, but it's almost guaranteed that when we leave this support, this resistance here, we're going to hit this peak. And when price goes below there, we'll still wait for some retracement, pick a sell. So this now becomes now the complete breakout, now the genuine breakout. So we check a real element chart to see if we can find something like this, a bearish one, or we look at the bullish one. This false breakout is basically when price goes below, fails to sustain. Have this. So mark this like this. Mark this as a zone. So look at how price was going from this point, this swing high, swing low. Look at how price was going downwards. This move, retracement, some move, retracement, some move down. Have a very good support. Support. It's a break below. Distance. So we expected that now that the price cannot break above this level, we expected it to proceed to the lower side. So when it came back again and closed above, the entire place, which was this, became the false breakout. This one. This became the false breakout, which means we're supposed to have bought the first retracement. This one, false breakout. So if you are looking at this properly, this was a sell, a good sell. But if you sold it and you didn't take profit there, price comes back and stops you, you still had the chance to buy it. If you bought this is almost 0% risk. There is no risk at all. Buying it here gives you a very good edge. You bought it there, expect price to proceed up to this is a very good level. So have another level here. Then you have another one top here. So basically, if you bought it there, your first take profit, the next one, last one is at the top. So which means you didn't take profit, it still will continue. You took profit, then you are good. You didn't take profit, it actually came back down and stopped you. So this is what we don't want. This is another thing. If you are trading breakouts, whichever, whether it's false breakout or breakout itself, the genuine one, be sure to pick your profits correctly. Look for the next key level and take your profits when price hits that level. So look for the next key level, pick your profits when price hits that next key level. It doesn't have to be here. It doesn't have to be here. It doesn't have to be here. But if you have a resistance which is close to you, this is still a level. You can still pick this when price comes, as long as it is guaranteed. Pick it. The next example. So we are still looking at a bearish breakout. What bearish breakout? False breakout activity. Yes, that. So let's check one out. We'll look at PUSD. Somebody may wonder why I'm sticking to Forex, but the main reason is very simple. I really like time frame. They give you the correct information. I don't want to focus on 15 minutes or 1 minute chart. It's really hectic trying to trace such a thing on a lesser time. So we move. Let us, instead of checking another one for bearish, let's look at a bullish example first. I want to draw this first here before I move. So this is what bullish false breakout means. When you have a resistance here, then price leaves the lower side, comes back, comes to this resistance. The first time it comes back, there is no it comes to that level, there is no interest, because we don't know whether it's going to break above or it's going to break below. But we also actually don't know if this is a resistance or not. But the more the price continues to bounce off from that level, the more we get interested. So if the first time price comes but does not break above, that becomes our resistance. And if it gets back the second time but does not break above, that becomes a resistance now. So the first time we didn't know if this was a resistance, but the next time we now verify that this is a resistance. So we now get interested that when the price comes back, we're supposed to look for a sell. So this happens, price comes back perfectly, and instead of bouncing off this level to the lower side, it actually breaks above. When you see this, that you are expecting to sell here, price has gone above, the thing you need to know is that this is called a breakout. The fact that price has gone above at this level is what's known as a breakout. But if after breaking above, price does not remain there, instead it comes back again below, the entire move, what we were referring to as the breakout, now becomes the false breakout. It means we've attempted to go above a particular level, but then we are not able to remain above that level. It's called false breakout. So always, as I mentioned with the bearish one, you need to wait for price to retrace. The first retracement after that false breakout is always the correct place to look for a sell from. The first breakout, first retracement back to that level after the false breakout of the same level is always the correct place to look for a sell from. If you want to trade correctly, if you want to make money, normally almost 95% at a time, you can identify the correct false breakout and then be able to wait for the first retracement, correct, like 95% at a time. Anytime you can see this, if you see this, that you have a level, then price has gone above that level, has retraced back, and then you pick a sell. Just know that 95% of the time you always be correct. Very, very correct. So this move here is actually the false breakout. The fact that price has gone above, price has come back and broken below again. This move here is called a false breakout. So this is the first case for a false breakout. There's another one which marks continuation of an up move. This happens, the price goes up, breaks below, then breaks again above a Z formation. What it means is we are still continuing upper side. So first thing, wait for retracement, then click buy upper side. Like we are looking at this chart, better be looking, but just notice how many times the price has gone above this level. This is the first time. Z formation, that's what I'm trying to bring out. We have that. I'll mark it big. This the first time price has gone above. Then second time it's going below. This is the first time it's going below actually. It's the second time we are seeing price going above. So basically we've gone above 2 times, but we've only gone below this level once, which means as long as we have price above this level, it's now a buy. And what that simply, this move to the lower side is actually false breakout. So this means we are continuing. If you can find this also on a chart, it's always the correct setup to look. They're like it gives you the best buy normally, 90%, almost 90% of the time. Always get it correct that the price is eventually heading to the side. So if you buy it here, as supposed to have your stop loss below the false breakout itself. The same way, if you are selling it, you're supposed to have your stop loss above the false breakout itself. So if you can identify the false breakout, your stop loss needs to be either below or above the false break itself. But the main chart. So on this one, I want us to focus from this point here up to this point where this vertical line is. We draw this here. So draw this. How best this resistance was previously. Then price basically breaks above, then retraces back. We see sign that this is support, we're supposed to buy, we're supposed to buy, then somehow comes back and plunges below. And the entire move, which is this one, becomes the false breakout. So what that means is the price should continue to the lower side after the first retracement. So you need to look for a sell here and the subsequent ones. Anytime the price now comes back for a sell, look for a sell, and you look for a sell. Then on the next one, this is still a sell. So the entire move, which was this one, is actually a false breakout. This it normally does not happen with it doesn't have to be like this. But the more you practice, the more you'll be able to find the various versions of the same thing. It's another version of the same thing. The same false breakout could be represented like this one. The same way, price may go above and then candles come back down, and then without bouncing back above, it actually breaks below. That is still a false breakout. We have this. Even this can be defined as a false breakout here. Look at this here, a resistance, then there's a break up, have a support, this break. So this is the false breakout here. And when price comes back, you look at a sell. Look at how much clearer this was. So if you can basically just trade this as a strategy on its own. If you sell it here, the stop loss needs to be above the false breakout, which is here. So your take profit, if you sell it there, this is your stop loss. Take profit needs to be around the previous swing low, which that is somewhere here. Okay, so if you sell it, should be somewhere here. This is the lowest low. So have this one here. So if you sell it there, these are the places you can take profits from. you can either wait for price to this point to this point, or from that point the next best place was supposed to be here. So if you took profits here, you're good. If your profits here, you're good. If you're waiting for price to come back to this level for you to take profits, of course you are stopped because the price came back up. So guys, that should be the end of today's webinar. I hope something new further than what I said previously. I mentioned a lot last week, a few weeks ago. Then I realized some people are still asking me if this is a good strategy, can they trade it? Then just using breakout itself. What I have to say is that false breakout is really good and genuine. You can find a good one, it's better to remain with the false breakout itself. You can still trade this as a strategy, but then you need to understand the concept of risk to reward. Ensure your stop loss is above false breakout itself, and take your profits on the next key level. That's the safest. So as I mentioned, as I always mention in any webinar, you want to trade correctly, strategy works best is risk management. That's the only best strategy. If you understand how to control the risks properly, get everything correct. So even if this one works perfectly well for you, risk management is still everything. So you have to understand how much you are risking in a trade, and you must be willing to lose that which you've risked in that trade. So combine risk management to this one here, and you're good. The strategy which I've mentioned, very, very good. So thank you. See you again next week.